Thank you. Thank you very much. Can you all hear me all right? Okay. She said there was no spirit in this room. Ndiyafuna nina niqhense ngandithethayo. Okay. Kulungile njalo? Oh, even so, there's no. Okay. Thank you very much for this opportunity to spend some time with you today. And I'm going to talk about this um, trade with good money management. I'm going to trade a particular trading strategy, which we call the fractal strategy. But before I do that, I'd like to just share a little bit about myself and how I got involved in the trading community. And I think that when I tell you that, you're going to be able to see from that that actually anybody can do it. I don't have a financial background. I was actually my dad was a sheep farmer in the Eastern Cape in a little town called Maltino, where they still make Omar rusks. Okay, and where Simba chips actually started in that little town, and you can check it up. But I was at boarding school all my school days. I didn't do very well at school, and my first job was at with Goldfields actually, and yeah, my first job was with Goldfields, and I was in the human resources department at Goldfields. I was promoted to personnel manager. It was called personnel manager in those days, not human resources manager. By the age of 26, I was doing very, very well at Goldfields, but I always wanted to be my own boss. So I resigned there and I went into business for a while. And then after that, I went into the ministry. I actually pastored a church in a little town called Berkeley East for a number of years. And there, while we were there, we founded and ran a private school. And but when my children reached senior school level, our school hadn't fully developed into a senior school. So we decided to move, instead of sending our own children to boarding school, we decided to move to East London. And it was in East London that I was I was looking around for business opportunities. Um, I was looking around, and then one day, a, an acquaintance of mine came up to me and he said, you know, Ross, you've always been teaching people different things. Why don't you teach them how to trade on the stock exchange? Now, I knew nothing about the stock exchange. I only knew what the you know what is seen on the news and that. I knew nothing about the stock exchange, but here I was with no financial background, no formal education in finance, in extremely little knowledge of the stock market, and being asked this question. So, well, I needed an income, so I decided to take up the challenge to learn how to trade. And so I took up that challenge. Now, what I did was I started our company, Sure Trading, in 2002, February 2002. So it's been 23 years that I've been teaching people how to trade on the stock exchange. I was marketing at that stage an end of day software package. You know, in 2002 is when the internet first started. We didn't have online trading platforms like we have now, but it was very new in those days. And one had to phone the broker to actually do a trade. But actually, I was in 2006, I was introduced to CFDs, contracts for difference trading. And the person who introduced me to it was an ex policeman. And he had turned 10,000 Rand into 1 million Rand in 18 months. And I thought to myself, my goodness me, this is something that I could do. And I took to it like a duck to water. So I saw the opportunity. And then I started actively trading derivatives at that point. That was 2006. And but I moved to Cape Town in 2008, mostly for family reasons, but also because my type of business, which is teaching people how to trade, can be done from anywhere. But move forward to 2016, I was approached by Penguin Books, and they asked me, can you write a book that'll help the ordinary South African make money from the stock exchange. And in 2017, my book, How to Make Money on the Stock Exchange, came out. And in this book, I talk a couple of strategies: the trend following momentum strategy, opening range breakout strategy. And this resulted in our whole stock market business, my education business, going online, because all of a sudden people from outside of town were actually asking me about the markets. And then in 2023, Penguin asked me to write another book, and I wrote that book called The Beginner's Guide to the Stock Exchange. And now there I teach a strategy called the fractal strategy, which I will share with you just now. And it was a strategy that I only learned from a very successful client of mine, and he taught me that strategy, and I share that in the book. And I also talk a little bit about long-term investing as well, which I believe should be part of every trader, what every trader should do. And I also talk about the psychology of trading. But basically, what we did when we started out is we wanted to create a community, and we have what we call our sure trading community, because trading, and I think a lot of you people, if you have traded before, you will know that trading is actually quite a lonely journey. You're very much by yourself, and so right from the beginning, what we did was we created a community of like-minded people where our traders could get together and bounce off ideas off other people who are more experienced in trading than they are, who can help them with their journey. And so this, our subscription program, this is what we call it, is a subscription program, and it includes live online trading meetings twice a week. So I get together with my clients online and I discuss the markets with them, and we do trading online, and that happens twice a week. And so I'm meeting with my clients on a weekly basis. We also have a WhatsApp group where we are chatting to each other and exchanging ideas, and we ask questions in real time amongst each other and communicate trading possibilities. And what I love about this environment is that it's a non-competitive environment. Now, I know there's a lot of competition in here, but it's the environment that where you trade. You know, a normal business, you are going to be very, you're not going to you're not going to communicate your secrets to somebody else who's in another business similar to yours, because they might steal your customers, they might steal your ideas. But in the trading environment, I can actually teach you what is working for me, and in that way, you can benefit, but it doesn't take anything away from me. And it doesn't jeopardize my trading if I share my strategy with you. And that's what we do. We have strategies that we share with our clients, and they work on them. And then we also have mentorship clients. And mentorship clients are the ones that really delve deep into it, and they enjoy a number of unlimited personal one-to-ones with myself. So let's get to preparing for trading. Now, I asked my group a question. I said to them, what does it take to succeed in trading? And their overwhelming response to me was, well, you need sort of technical knowledge. You need to know chart patterns, support and resistance, money management, position sizing, technical indicators, all of these things that people talk about. These are things that you need to learn before you actually start trading. That's the technical side, and which is very big in the beginning in your mind, but actually you realize once you've got some experience, you realize that the technical side is only 20% of what you need. 80% is actually the behavioral skills, the consistency, the discipline, the patience, the dealing with fear and greed, things that you need to develop, and they take time to develop if you want to be a successful trader. So my thing is, I believe that you need to keep it simple. Of course, you need to have some knowledge of technical analysis, and yet, I just want to tell you a quick story of a person when I was quite new in this environment that I operate in. I had a guy inviting me to his home. He was a trader, and he said, "I want to just show you my setup." And I walked into his home, and he had 3 screens there, and his chart looked like that. I mean, it looked like a dog's breakfast to me, but. And he was so knowledgeable about technical analysis and the things that he had already forgotten I hadn't even learned, and and I was quite intimidated by him. And I said to him, I said, "But you must be doing really well on the stock exchange." And he said, "No, I actually don't trade much." And I thought, "But now, you know so much." But the thing is, he said to me, he said, he hardly traded because there was a time earlier in his journey where somebody convinced him that he should put all his money into something that there was no risk. It was definitely going to be a winning trade. Put all his money in there and lost a huge amount of money. Consequently, he was so scared of trading. If all of his technical indicators didn't fall in line, he wouldn't trade. And that to me is what I call analysis paralysis. And so there are many people that overanalyze. And I believe that one should actually just keep it simple. I call it clean charts. You know, some of my most successful clients have what I call clean charts. At the most, 1 or 2 indicators, support and resistance lines, and so on. Now, trading can be tricky, but it doesn't have to be complicated. Don't overcomplicate trading. Now, as you've no doubt already picked up, I am what my company is like Sure Trading. It's actually suretrading.co.za if you want to go to our website. Sure Trading is an education company. We are not brokers. Okay, we educate and we teach people how to trade. But of course, when you do trade, you need a broker where you can place your trades. And that's where our brokers come into. About 16 years ago, I was approached by a gentleman, one of the directors of a company called Velocity Trade, and he invited me to use their premises to meet with my clients and to train my clients. Up to that time, I'd been hiring premises around town. And of course, that was music to my ears because it would cost me less. And so I was very happy to take up their offer. And so I've known these brokers and I know the individual people in the brokerage. I've known and I trust them. And I've been with them for the last 16 odd years, about maybe 15 years now. And they are what we call direct market access brokers. And they provide state of the art, the Velocity Trader platform. And as I said, I know and trust these people. Now, Velocity Trade, also interestingly enough, Velocity Trade have integrated with Trading View. Quite a few people, you people might know the Trading View. The Trading View platform. It's a very well-known platform internationally, and Velocity Trade was the first South African company that had introduced that was fully integrated with Trading View. So if you open a Velocity Trader trading account, you can also trade that account from the Trading View platform if you prefer that platform. So there's a lot of flexibility. So there's the Windows desktop app of the, now what you can do is maybe take a photograph of that. If you want to open a brokerage account, you can start with a demo account, and there's the link over there. And so you can access it via the desktop. They also have a web platform where if you haven't got Windows, you've got Apple Mac or something, you can go to the web-based platform, and you can also get it on your on your Apple phone, um, and also Android. So you can have it on your phone. And then, of course, the Trading View platform that you can use as well. So let me go on now with preparation to trade. As I said earlier on, keep it simple. You need to understand that trading is a business. It's not a hobby as such. Businesses make money, hobbies cost money. And so your trading business um, is actually a business. And if you know anything about business, in business, you need to have written rules um, called your trading system or your trading strategy, or you can call it your edge. Your edge is where you basically putting the odds in your favor. That's your edge. Now, bear in mind that you are entering an environment where there are very few rules. And as long as you have money in your account, nobody's going to stop you from placing a trade. We all know that. So if you want to become successful in trading, you are really going to have to create your own rules or borrow rules from people that have more experience in trading. So these written rules help you to be consistent in your trading. There are rules around entering, exiting trades, money management, position sizing, etc. And you need to test your strategy, obviously, in the demo environment before you go live. So the idea is this: you need to learn how to plan your trade, and uh, and you know that's 20% of what you need to. This is the technical side. But the big challenge is when you get into that very emotional environment, is you need to trade the plan. So it's easy to plan the trade, but you need to trade the plan. Don't trade this emotional roller coaster that is the stock market. So the idea then is you need to follow your rules. That's the first thing. Follow your rules. You've tested them, you've tweaked them, follow them now. And your rules don't guarantee that your trade will be a winner. But what they do is they give you an edge. An edge is nothing more than an indication of a higher probability of something happening over another, and of one thing happening over another. And your edge or your trading strategy is basically putting the odds in your favor. Now, if you don't know what your trading edge is, if you don't know what your rules are, um, that means that you don't have a trading edge. And that means that you're just gambling with your money. So it's very important. And we're very, very strict on that with our clients, because there's so many people that lose money unnecessarily, purely because they're not well prepared in the trading arena. And then the other thing is you need to embrace the risk. Now, we all know that in our head. People say to me, yeah, no, I know there's risk involved. And of course, there's risk involved. We all know that. But head knowledge is not enough. You have to embrace the risk. Now, I want to give you an exercise on how to embrace the risk. If you tell me that you are prepared to lose 500 Rand on a trade, okay, well, then give me 500 Rand in cash and watch me tear it up in front of you and see whether that has any emotional feeling. If there's emotion involved, it basically means you have not embraced the risk. And embracing the risk is one of the secrets to trading. And that's why your risk must never be more than your emotions can handle. Okay, does it touch you emotionally? Embracing the risk is having the correct perspective, knowing that losses are a part of trading, and you have to be comfortable with that reality. And, your risk per trade should never be more than 3% of your capital. In fact, 3% is even stretching it. It should be just 1% of your capital. If you trade and you don't allow yourself to lose more than 1% or 2% or at the most 3%, you will continue to trade. But if you are starting to lose more than 3% on a trade, you're going to wipe out your account very, very quickly. So it's very important to embrace the risk. And of course, you also need to have an exit strategy um, in your to set in stone, basically. In other words, before you get into a trade, you need to have decided, what am I going to do to get out of there, to get out of the trade. And then you need to deal with your fear. If you can conquer, listen to this, if you can conquer your greed or the greed gremlin, you will find it easy to deal with your fear. And greed and fear both block off your ability to see the signs that your trade is not working out. If you're in a trade and it's losing money, and you can see the signs, but you actually don't see the signs. And only when you get out of the trade after losing a whole lot of money, then you realize, hey, I should have seen that. Why didn't I see that? The reason is because emotions, your fear actually blinds you to the reasons why you should have got out. And there are 4 fears to overcome. The first one is the fear of being wrong. Okay? People say, oh, I was wrong, and they feel they're a bad trader. No, don't. You're not a bad trader because you lost on a trade. You're a bad trader because you didn't follow your rules. That's why. But the fear of being wrong, the fear of losing money, obviously, that's a big fear. The fear of missing out. So many people don't take profit when they should because they want more. And so they fear of missing out, and they lose money. And fear of not taking advantage of profits when they're available to you. Okay, so now there are some key aspects to trading that I'm just going to whip through, but basically the question is, what makes the candles move on the chart that you are trading? Obviously, it is the price action. It is the buyers and the sellers buying and selling, and that's what moves the chart. So obviously, when everybody's sitting on their hands or the markets are closed, the charts don't move. But now I want to talk about a price action strategy. So if you are looking to trade a price action strategy, you need to have price charts, you need to have pattern recognition, trend analysis, support and resistance, psychology of market participants, no lagging indicators, and predicting future price movements. But in essence, trading price action is about, 1, understanding price movements over time. Number 2, identifying patterns and trends. And number 3, making trading decisions based on those patterns and trends. Okay, so now what we're going to do is, in our preparation for trading, you need to decide what time frame you want to trade. And this will depend on how much screen time you can manage throughout the trading day. So risk management decisions based on, they need to be at the closing of the current candle. So if you trade a 5-minute candle, basically you need to be in front of your computer all the time. If you trade a 30-minute chart, you need to make decisions every 30 minutes. If you trade an hour chart, you need to be making decisions every hour. A 3-hour chart and a day chart, that I call that end of day trading, that is where you would only have to make a decision after the market is closed. So that's once a day. Okay. Now, the strategy that I want to share with you is called the fractal strategy. And when I want you to, I believe I can do this. That over there is a fractal. That over there is a fractal. And basically what a fractal is, it's a fractal up here basically means that there are 2 candles to the left going up towards the middle candle, and then 2 candles lower. It's like your hand. The fractal is your middle finger, and the other 2 are. So now what is a fractal? Why? A fractal is basically saying to you at this point that there were buyers in the market at this point, and at this point, with this doji candle, the buyers wouldn't buy anymore. They didn't want to buy at a higher price. That's just the people that are trading at that particular time. Okay? There, the sellers, there's 2 candles coming down towards that one and 2 candles going up. So it's a 5-candle thing. The sellers were selling, they were pushing the market down. And then at this point, the sellers basically petered out and the buyers started coming back in. So we use the fractal as an indicator that can really help us to get into a trade. Now, let's just have a look at the actual fractal strategy. Now, there are 4 criteria that we look at when we trade the fractal strategy. The first one is the entry criteria. At least 2 of the 4 that I'm going to explain need to be showing before the trade is taken. So the first one is the 5 fractal indicator. The second one is the stochastic indicator, not in order of importance. The third one is for long positions, a breakout above the descending resistance line of 5 or more candles, and for short positions, a break below the ascending support or resistance line, okay, which is 5 candles or more. And then the last one is a doji or a similar candle. These are the criteria that we use before we enter a trade with this. It doesn't matter what instrument you are trading. It doesn't matter what time frame you are trading. It is, I've only got 4 minutes left. Okay. The exit criteria is the same as the entry criteria. Okay, so I'm going to go straight to this chart over here. The exit criteria, if you want to just same as the entry criteria. And then, yeah, you need to have your stop order and in the right place. I haven't got time to share that. But here's a chart that has all the 4 criteria to be able to get into a trade. Okay, now these are, oh, I was pressing the wrong one, sorry. These are the fractals. They sometimes come in triangles, sometimes this. Okay, and in this particular case, it's a 5-minute candle. Okay, it's the US Tech, it's the NASDAQ. And so there's a fractal. Okay, the time here is between 11 and 11:30 in the morning. And it's when the European market is quite active, right? Now, this you can do at any time of the day, obviously. So there's a fractal. So there's the first reason. I would place an order there where that fractal is. And my stop loss for that would be underneath that fractal. Okay, and then as time progresses, obviously that fractal has not triggered an order yet, but then I draw my line. That's 1, 2, 3, 4, 5 candles. Okay, and the first candle to break out, now you honor the wicks. First candle to break out, suppose I can't do it, no. The first candle to break out and close above that is where I would enter. And in this particular case, the fractal was at the same level that I would have entered. I always put in what we call a stop order, which means that the market has to come to me to pick me up. I don't put in a limit order where I'm expecting the market to come down, pick me up at a better price. No, then I might not get into the trade. So as soon as it goes up, I will get in. And there, the stochastic was coming up from, I've got an 80, 20 and a 10 line there, was coming upwards at that particular time. So there was, every criteria was in place for me to place a trade. Okay. And now, of course, the challenge is to when do I get out of the trade? Now, I was hoping to go live on this, but I am, you know, you can't even beg because they can't. The other speakers. Can you give me a couple of extra minutes? 3 minutes. Okay. So I want to. Can you put this chart on here? Okay, over here is a chart of the, it's an hour chart, US Tech. This was yesterday. So how would I have traded this hour chart with the fractal strategy yesterday? So I've blocked off, this was the during the night. So this is the midnight candle. This is, and so what I do is I go to my computer and I go to my computer and I wait for the 8 o'clock candle to finish. So there. So that is what I would have seen now on the chart when I looked there. Obviously, I would have looked at the day chart to see what the general trend is and everything like that. But I would then, now the stochastic is right up at the top. So I would, now this is, of course, uh, very much in the night. What's wrong? Is it okay now? Sorry. Okay, so what I would do then is I would rather wait because there are no signals, a lot of doji candles. The stochastic is right up at the top. I won't, this is a fractal that happened at 2 o'clock in the morning. So I wouldn't trade that, but I would just wait for further indication. Okay, so now what I'm seeing now is a fractal is coming into play. So what I would then do is I would put an order in to go short at this point, right? There's a fractal, okay? And but I wouldn't, it wouldn't necessarily trigger. I haven't got an order to go long yet. The reason I'm hesitating is because the stochastic is too high. And then, so this is yesterday, folk, and there it didn't trigger that order, but there I saw there was another level. Now, initially, I would put my, sorry, let me just, my risk in this case would have been about 1,200 Rand. 1,200 Rand. And your risk is always the difference between your entry price and your stop loss. So I would have had my stop loss at this point here. Okay. I actually use the order entry to give me the position size, but I can't show you that now. Okay, so what happened was every hour I would come back and there I saw it had triggered my order to go short. Okay, then I would wait and I have an indicator called the ATR bands where it actually helps me to move my stop loss as the trade goes in my direction. So I would move my stop loss to just the ATR bands just before, not on the actual candle that's working at the time. Okay, so then and then just quickly. So I need to go through this quickly. Um, Okay, there, beautiful. By the way, I would have my take profit. You can put in a take profit, or you can move your stop loss. I find it better to just move your stop loss, and there, beautiful trade. Now, when do you get out of this trade? That's the thing. The stochastic is right down at the bottom here, and I'm going to start drawing my lines there. Um, start off with that one there. And then as soon as there are 5 candles uh, there, I would then move my line to this place over here. Uh, to there. Okay, and any candle that goes above there, I'm going to there it continued down. Okay, now that one ended there, so I'm going to put my stop loss over there. So how much would I have made on this particular trade? For one contract, I would have made, if I'd closed it there, 5,334 Rand on one contract of the US tech. So basically that's what we do is we teach people specific strategies. Our trading meetings have specific we discuss specific strategies and we answer questions, and so we really have a community. Okay, so now you say, well, I chose the perfect. No, I chose yesterday. That's how I would have traded the hour strategy. Okay, but I just want to say that um, I have 9 books here, and I'm going to give those away to the first 9 people who sign up for our subscription program. Okay, so if you want to do that, you can come forward just now when I'm finished, or come and see us when I'm finished, and I will give you a book for the first 9 people. If there are more, I will send the book to you. Okay, our subscription program is 500 Rand a month, and there is no obligation to continue. You're not locked into a contract. If you want to just do it once and get access to all of our training material and unsubscribe, you can do that too. I don't like holding people to something that that gives us a bad name. So yeah, thank you very much, folks, for listening, and thank you so much, Despina, for the opportunity. And I'm finished. Thank you.